Greetings, everybody. This is Christopher Messina coming at you from the Messy Time Studios on a beautiful Florida day, 16th of August, 2022. I am joined transatlantically in the studios by Alderman Professor Michael Mainelli of the City of London, who is coming to us from London. Michael, thanks so much for taking the time.
Delighted to be here, Christopher.
Well, I would suggest that also I didn't note he's the chairman of Zien, which I gather is one of the kind of earlier startup incubators in the city. Is that a correct?
Yeah, we sort of call ourselves a commercial think tank. Yeah,
Commercial think tank. I like that. That's a good phrase. So, what is kind of top of mind these days for you in the city and how things are moving?
well, given the news today, I think we can have a discussion later. But it is always in the last few years when you've got the usual geopolitical stuff. We're looking at Ukraine, lawsuits flying around on insurance cover, lots of fun stuff there. Everybody's concerned about the state of the markets. That little backwater of crypto is drawing in a lot of attention as it seems to be imploding. But we'll see where that heads. But I think if you cut through all of that and look at over the very long term, there have really been two large themes in the city, and one has been fintech, although personally I find fintech a bit dull. I moved into the City of London in the early 80s because we were computerizing then, so it's just a continuation of
Right.
4 decades of, or more than 4 decades of computerization. That everybody tries to spice up every time. But the other one, which is equally lengthy, is in fact green finance. And what do we do about the various areas of trying to make the city sustainable or contribute more accurately to the sustainability around the world? So those would probably be the two big ones, but maybe today we could focus in on green finance and what that means.
Yeah, that'd be killer because we're ecumenical in our approach here at Messy Times, and we've got everyone from oil drillers who will throw someone out of a cocktail party if they mention carbon in a negative way as opposed to a positive way. I have actually had a lot of fun seeing how long I can pull someone along on this bit until they catch it, because I talk about all natural organic sources of heat and energy. It's just remarkable. It's easy to carry. And then eventually someone realizes I'm talking about coal. And they get very upset. But as a proud centennial member of the New York Cultural Association, I kind of have to fight my side. But what are the biggest things you've seen that are kind of substantive versus window dressing? Because jesting aside, a lot of criticism I see in finance is, you slap green on something and you can skate away because the protesters leave your front of your building and go protest in someone else's building and you're like, whew, dodged it. But have you seen substantive stuff versus window dressing, and where do you see the real actually useful stuff happening?
Yeah, that's a good question. Yeah, well, the interesting thing to me is it is funny. In the olden days, white was the color that you wore to indicate purity and honor. And today it's you slap green on it. And you make an argument that I often make, which is arguably the biggest difference between renewable energy and fossil fuels is that fossil fuels come with embedded storage. That lump of coal or that 55-gallon barrel of oil in the corner is still going to be good thousands of years from now. In fact, the oil drum will probably break before it does. So, so there. Well, let's just maybe recap on where things have been going. So within the City of London, which had a torrid time really after the war, basically around 1939, it really didn't function as a financial center. And then after the war, it slowly regained its feet. But the City of London is many things. So on the one hand, it is in fact a euphemism for finance. People here in the United Kingdom will say the city, and they mean variously banks or insurers or
Wall Street.
Sometimes people talk specifically about the city in an economic sense, and there they mean roughly 525,000 people in the square mile who produce several percentage points of GDP, well out of proportion to the other 30 million workers in the UK. So really quite the powerhouse. But the strength of that city is very much in wholesale finance, the sort of things that people in financial centers around the world notice, but would have absolutely no relevance to an American consumer of financial services directly. Then you have the city, which is the ancient core of the city, the geographic area, of which I'm proud to be an alderman. There are 25 aldermen, 100 common councillors, and a Lord Mayor presiding. And we date back arguably to about 640 AD. In my opinion, we're sort of the largest workers cooperative, democratic workers cooperative in the world. We've had a continuous democracy since about 880. So it's a very ancient and venerable bit. But that bit and the financial bit do overlap. So the first point that this comes out is actually in 1953. It was the City of London Corporation that issued the very first Clean Air Act that we know of. The UK government followed. You'll remember that this was the days of those pea soup foggers and all of that. The UK government followed in 1956. So it almost starts there. And then skipping quite a bit. Probably the most interesting element for us was in 1997, a group of US policy wonks hot on the success of making a cap and trade market for sulfur dioxide emissions between 92 and 96.
Right.
In 1997, they go to Kyoto and they say, hey, it worked for sulfur dioxide. Let's do it around the world on carbon. We picked that up here in the city. And in 1998, a group of us wrote a report on what carbon trading could mean for the City of London. And that report turned into a shadow trading market. And that became the European Union's emissions trading scheme. So we've had success at that level. Of course, the US sort of left everybody high and dry at the altar, not really signing up to Kyoto, but the impetus was there. Unfortunately, a carbon trading scheme is simple, but not so simple that politicians can't muck it up. And in fact, they issued far too many permits in 2007, and the market functioned perfectly. We had nearly twice as many permits as people wanted to emit carbon in any year, and the price plummeted to close to nil. So there's quite a taint there, and a lot of environmentalists say, oh, cap and trade doesn't work. You've got to go in and regulate and deal. But cap and trade is a simple system. If I want to move from 100 units of emission a year to 50 units over 10 years, I just simply, scale it down by 5 units a year. The price goes up. People seek efficiencies. Those who are efficient trade the permits with those who maybe want to ride out dirty for the next 10 years and then close down. It's really up to people in the market. That's why it works so well on the sulfur dioxide. And it works well in many other pollutant areas. It's a scheme to be used.
But it has to involve a fixed amount, because if you don't have a fixed amount and you don't have global participation, it's squeezing a balloon and it just pops out the other side.
Correct. And as an investor, say in renewables, you say, well, this is great. There's a carbon trading market, so I want to be in that because I'm going to use my renewables to compete. But if something happens like a Ukrainian war and the government say, well, gosh, these permits are getting too expensive, we'll issue some more permits to make it all easy. You, the investor in renewables, are losing out just when you should be gaining.
Right.
So there's a need to keep governments under control. I'll come to that in a second. The City of London has, of course, also participated in the Rio Summit, Copenhagen, Paris COP, etc. We go to these functions and present what we think the financial services groups want to do. The City of London here in the United Kingdom tends to represent the professional business, financial and technical services of the UK. In fact, the Lord Mayor,
would just interject to say that for my American listeners who work on Wall Street, that is a very distinct difference of the city. Is there actually is a corporate entity with representatives who actually speak for the city, whereas on Wall Street, plenty of people can claim that we're speaking for Wall Street, but you're not. Right? Jamie Dimon talks about J.P. Morgan Chase, and that's a big difference. Is that there actually is somewhat of a representative unified voice.
Yeah, that's absolutely correct. And some of that's because we're a little bit more centralized here than in the United States. So, somebody was saying they spoke for Wall Street, somebody in San Francisco or Chicago. Wait a minute. The second thing is we do actually come from being an elected body, which is there. And many of the people in that elected body, myself included, as one of those, often work in financial services or economics as well. So it's a good way to go. In fact, the Lord Mayor travels. It's what's called cabinet rank when he or she goes around the world visiting other financial centers. So it's quite a big thing and fairly organized for that matter. Anyway, returning to the green element, since 2007, we've been quite disappointed, and that's quite a period of time to be upset about something. And we have been trying very, very hard to get those carbon markets working. Meanwhile, another approach, which is often referred to as ESG, environmental, social, and governance, has been an approach used typically by analysts and large accountancy firms they propose that by tracking a whole range of indicators, they can force companies through the cost of capital being raised to be cleaner in many, many other ways. We'll come on to that. And there's some advantages and disadvantages with that approach. However, where we've had some great successes lately have been twofold. One is that finally people are waking up to, if you want to solve this climate change problem, if you believe it's real, and I still, much as the fact I'm a 40-year environmentalist, I do reserve that modicum of doubt about some of the science. Can we see where the reduced radiation emission in space is really happening? Where is that coming
How long
from?
a time series is statistically significant for geological events?
There's a lot of
last time an ice age receded, we got the Renaissance, which people think was a good idea. But anyway,
yeah. It's but if you say, this is what society wants, it wants to cut that down. Cap and trade is a great way to do it, and we would like the carbon markets to do that for us. But I just said we have to trust governments. So the first thing that's happened has been a number of governments who may not be quite so democratic. I often say that people say that
we're not going to touch on the U.S. administration right now.
No, we're not going to go.
I had to get that cheap shot in. Go ahead.
Well, I often say, that people say, "Well, Mussolini made the trains run on time." Well, that was actually propaganda by.
He didn't even do that.
He didn't do that. But what people admire in dictatorships is typically that they make a decision and they stick to it. And we in democracies are really good at making decisions. In fact, we make a different one every morning when we get up, and that is the problem: is how do I do long-term decisions? And if I've got a long-term problem, I need to find ways to bring the future into the decisions of the present in monetary terms, and know that there are other mechanisms for this, the appropriate use of discount rates, etc. But markets are particularly good at this, and where we shine here has been trying to push that carbon market. And our biggest success was actually, believe it or not, last year, and it wasn't due to us, I shouldn't call it our success. A great success was China entered with its own national ETS. It had separate systems before, but it has decided to go. So now we're looking at just under 25% of the world's emissions are covered by a reasonably credible emissions trading system. And that's not bad and could lead to some good stuff happening. However, I'll return to my final point, and then we can go on to ESG perhaps, which is what was our success? Well, we had tried for some time to get companies not to issue green bonds and say, I need this money to be green, but to issue bonds that would pay higher interest rates if they failed to be green. This is something that we here at CN promulgated starting in about 2005. Finally, with the support, oddly, of the French government in 2018, we had a number of companies, big names to, we had, Danone, the yogurt manufacturer, et cetera. We're issuing these bonds. Enel, the very, very large Italian energy company. And these bonds will pay more interest if they fail to meet their targets. What they use the money for is up to them. So these are very outcome-based bonds, very like an inflation-linked bond. In fact, I think the first inflation-linked bond was issued by the Commonwealth of Massachusetts in the late 1770s to sort of compensate soldiers who were afraid that as the then equivalent of the dollar was inflating away, nevertheless they would get their pensions in the same amount of money. So great idea, but what we're really after were the sovereigns. And this year, in March 2022, with a tiny bit of assistance from CN, the government of Chile issued a $2 billion bond. And that bond is tied to their 2030 targets, to two of them. The amount of emissions that they have, which they need to get down, I think from memory, to from something like 113 megatons down to about 95, and the amount of renewable energy that feeds their system, which they need to raise from about 45 to about 65. So those are good targets. If you're an investor and that's what you want to bet on, then these are very sensible products. They're easy to measure. And if the government of Chile makes it, that's great. Because although you've given them sort of free money for a while, nevertheless, they've achieved their goals. If they fail, you get compensated. So if you're a large insurance company who's maybe got your portfolio in a lot of renewables, you would actually like to buy the Chilean bond to hedge, as we call it, the risk that the government doesn't handle those renewables. And we've got high hopes. The corporate bond market in this space, it's also called sustainability linked bonds. These policy performance bonds went from 0 in 2018 on up to 110 billion in 2021. So this 2 billion issuance from Chile could be enormous. And further, it could be enormous because nearly 3/4 of the world's bond market is held in the sovereigns.
Yep.
And not all countries can issue debt. That's probably about 65 or 70 sovereigns globally who can issue this kind of debt, as opposed to 10,000 companies you have to do to get to just over 25% of the market. So very exciting stuff over here, because these are sort of bond cuffs on government policy.
Here's a question for you, because I'm being a bit familiar with the Chilean landscape, because I've got some friends who are on boards of mining and oil and gas companies there. And Chile, of course, was a phenomenal success from the Milton Friedman-esque University of Chicago types. Years ago, they created a ratcheting system for their budget, which is basically, they weren't able to spend more than a certain percentage outside of the trailing average of last year GDP, or however it was set up. It was designed to be a very strict. I would love to impose that on Congress retroactively, but it was actually worked very well. And this new development, it's good to hear your perspective on it, because the perspective I've heard on it is people are betting 95% handicap that Chile will not get to those targets whatsoever. And the Chilean government is paying fast and loose with their taxpayers' money because they themselves don't believe they're going to get there. And that's a cynic's view, right? But that is what I've heard from the mining companies there. That there are two ways you can use anything, right? A financial instrument is either used for purpose the way everyone involved thinks it should be, or anyone can game the system, right? If I find out that I can get cheaper money now and it's a 20-year bond, and I think my political career is over in 3 years, sure, I'll sign up for this thing that's got a balloon payment at the end. Well, I'll be dead by then. So how it's very hard to play chess with reality, right? So the older I've gotten, the more I believe in Immanuel Kant's assertion that all you can do is think the a priori moral step right now, because you can't predict the future, right? So how do you, and I only ask that in terms of cities' focus on this sort of stuff when it comes to ESG, which is a core part of this, right? This whole environmental social governance thing. There was a big article today about 13 or 14 states attorneys general in the US suing BlackRock, saying that their adherence to ESG standards was not in keeping with the fiduciary responsibility to provide the maximum possible returns to their pension holders, right? And I'm curious how you see threading that needle, right? Because we've had this chat before, that when I saw ESG appear, to me it appeared to be a political shakedown to private companies, and that by agreeing that ESG was something we should measure, that was actually kind of capitulating the argument that companies weren't being environmentally, socially, or governance responsible beforehand, because it's kind of begging the question. If I have to prove you're a good person, but I thought I was hiring thousands of people and paying lots of taxes, what was I doing wrong? So, how do you kind of balance those things, right? Because no sort of process or theme in financial markets comes with wholehearted endorsement from everyone. How do those proponents of ESG push back against those who think ESG is just a shakedown by politicians versus it actually is useful and is useful guidance? Does that come up a lot?
Well, let's establish a little bit of kind of what is ESG, and ESG is very messy, which is completely in line with messy times.
Exactly, perfect topic.
So what we've got out there is we've got a bunch of people who are taking a whole bunch of measures that aren't typically presented in financial statements or accounts, right? And they're saying these matter for the long-term prospects of the company, i.e., the investment. So it could be a bond or something as well. They collect a lot. There are hundreds of points. So On governance, you're looking at the independence of the directors. Are the CEO and chairman roles separate, which is a big thing here in Europe, not so big in America. And you go through a whole long list of things. Social, they want to look at social inclusion, diversity, a whole bunch of factors there. And then on the environment, it's certainly not just climate change, it's also water usage, it's packaging, it's waste production, it's energy consumption, even if it's clean, et cetera, et cetera, et cetera. So there's a lot of stuff. And these people are poring over these companies and then producing reports. And that was all okay until people decided that they wanted to invest alongside it. One of the big, I don't know if you're old enough, I'm old enough to remember when we marched against apartheid and we were trying to get our universities to divest from South African companies. Jury's out on how much that actually did. I have actually heard from a few South Africans, no, it was helpful. Our local multinationals did pay attention, but there are a lot of economists out there who say if you adjusted the cost of capital, it was close to insignificant. So it's based on quite a tenuous, wet piece of spaghetti management system that by raising the cost of capital just a little bit, this company is going to change all of its behavior.
Before we move on, that particular instance about South Africa, I do recall I was there in New York when Mandela came to speak. And then I moved to South Africa 4 weeks after the fall of the apartheid government. I lived there for a number of years, and everyone in South Africa I knew, especially on the African National Congress side, so Umkhonto we Sizwe, which is the spear of the nation, the armed military wing of the ANC, all of them said, "You idiots, this divestiture nonsense was crap." So why? Well, because people had jobs. With jobs, they could buy rifles and ammo. Without jobs, they couldn't buy rifles and ammo. So I don't know what you idiots thought you were accomplishing. You were just starving us and pushing us to the arms of the Russians, right? None of us were native communists, but they gave us money. So that was my on-the-ground interpretation from ANC members about how useless you're marching in the streets and telling Harvard to sell stock at Sasol. Anyway. So
no, but
that's what I mean by playing chess with reality is you can't anticipate what you're going to do. But anyway,
that is a good example of that unintended consequences thing. Anyway, so the theory is not particularly strong, and many of us, when this came out, were working around. It was initially it wasn't called ESG. There were a number of things, but I do recall there was a particular movement called the Enhanced Analytics Initiative here in the UK about 20 plus years ago, led by a large number of large-scale investment managers, which comprised some, I forget, it was getting on for 50 billion or something, which was big in those days. And they said, we are going to look at extra financial indicators, which is, now this is where you start to see the problem. So you're telling me that separating the chairman and the CEO is a good thing. Okay, fine, I can do it. I can see in the report this.
And the governance part of ESG has never been a problem. I worked for Corporate Governance International in Australia for a while. Like focusing on governance in corporations has always been important. But that was the funny part of throwing that in. Like that's what I meant by it was a political red herring, because especially among governance, one of the most focused on criteria of any company that everyone looks at. Like suddenly the statement is, well, you're not looking at governance. Oh, hold on, what? Excuse me? Yes, we do all day long anyway. But
yeah. So now show me how much that's worth, because I would really like to invest in this company because it's doing really well. And I'm sorry that the CEO and the chairman are the same guy or gal, but what the heck?
Right.
Just tell me how much I should expect. Oh, it's not as clear cut as that, right? Oh, I see. So if they're extra financial, then they're not. They have to be financial to make a decision. So that leads me, I think, to one of two paradoxes. The first one is, well, I've got all of these measures, but I have to translate them into a financial number. And just think about it from a managerial point of view. You and I both run a division of a company, okay? And I'm known to be the meanie, and you're known to be Mr. Nice Guy. And our boss comes to evaluate us, and he says to me, Michael, you're Mr. Meanie. How well have you done this year, boss? Huge profit.
Killed it.
Yeah, killed it.
Miserable employees, really high profit margin.
Twice what that soft, cushion-headed little Christopher does.
He actually knows his employees' names.
Yeah, I don't care.
Crazy.
And the boss is like, yeah, but what about that sexual harassment case, Michael? Oh, well, these things happen. Boys will be boys. You know, what about that huge pollution leak you had into the local river? Hey, we cleaned it up. We paid for it. What's your problem? You know, got some good press coverage too.
Now more people know who we are.
Right. And the boss is like, well, Michael, I really want you to stop doing that. I go, well, okay, that's fine. Just tell me, how much is having a clean river worth to you? You see? And
I'll get back to you.
then they come to you, and Chris, you know, running a loss-making division isn't brilliant. Yeah, I know, but we've got the highest scores on staff satisfaction, and everybody loves it.
Childcare. I'm giving people extra time off. The workday starts at 10 and ends at 2. It's great.
We just don't make a profit. Well, look, Chris, I want you to do all that stuff. It's really good, but just make a profit. Well, okay, boss. Well, tell me, how many people do I need to, you know, leave the firm because they're dissatisfied yeah, to achieve my profit before you're going to, you know, and as you get into this problem, it's what I call the multi-currency problem. Instead of keeping everything in money, you've now got all of these various measures. And in fact, it's gotten so bad that MIT issued a report and now runs a project called, believe it or not, aggregate confusion.
Magic.
In 2018, they issued a report saying we can't make heads or tails. And then, of course, you've got a plethora of providers out there. I think there's some 45 or 50 credible providers, and they disagree. So Shell will be nasty on one, top fifth on another. It's all over. So that's the one paradox.
But the second, very quickly, because this is important, we addressed this issue in 2005. I worked on this with two big banks in Asia and this governance group, because asset managers were asking, great, you send me this 4-page governance report. What does it mean? How do I sell this stock? Do I buy more of it? And so we actually used fuzzy set theory to create a bunch of ranking indicators, because everyone loves a number. So 0 to 6. And so for things like audit committee, that was pretty easy. Like, you know, if your lead independent director is the chairman of the audit committee and none of management sits on the audit committee and the auditor is chosen randomly every year, that's a 6, right? That's a perfect audit committee. A 0 would be the CFO is the chairman of the audit committee and the CEO and COO sit on the audit committee and the wife of the CFO is the lead partner at the audit firm. That'd be a 0. Right. So you could create rankings out of fuzzy set theory, which is designed for kind of ambiguous qualitative data to be jammed into quantitative terms. But even then, it was all the signals that were useful were to the downside, because the market expects that companies are well run. So you found something that had perfect governance scores over long term that wasn't reflected in the stock price. It wasn't tradable, which is all we cared about. But if you found a bunch of 0s, short that puppy, because something wrong is going to happen. And so all of the indicators were the downside, which I find, which certainly informs my view of all this ESG stuff, because I watched it happen. I watched it financially, that if you find something awful, that's a great downside indicator. If you find great stuff, doesn't change anything. Doesn't change the financial outcome. Yeah. Sorry, I didn't mean to interrupt, but that point about how you quantify that sort of stuff.
Over here, there's a bit of a legendary investor, Terry Smith, who is involved in Morningstar and places. And Terry has an expression which goes along the lines of, you know, buy companies that can be run by idiots, because one day they will be.
That's good.
But yeah, but in other words, keeping it simple. And money is at least the simplest. I won't claim money is simple. Right. So the second paradox you face, of course, is, well, all right, I've got 2 markets out here. I've got this ESG market, which is typically the public markets, because that's how this pressure is brought to bear. Or I have this lovely private market where people just care about the cash.
Simple people we are.
And which one would you rather be in? One where people are micromanaging you and going up and down and creating single issue items that create yet another problem for you, whether it's dolphin friendly tuna or caniper grown coffee beans or whatever? Or would you rather be over in this simple market? And a lot of us said, well, that's what's going to happen, is it's going to drive it out. Now, this is not to say we don't have real problems. And I do like dolphins, and I was on the Ocean Alliance and International Fund for Animal Welfare trustee. So it's not like I don't like them. But there are other ways to solve these problems. In fact, on fish, We created the Marine Stewardship Council, the Happy Ticky Sustainable Fish thing. So getting the consumer the information that they need and all of that, but not trying to do it through the corporate ESG.
Right.
When it comes to climate change, that's a particularly good example, in my opinion. I'm not anti-ESG in whole. It's probably not a bad idea to know some of the things that companies are doing. And if somebody wants to make a sort of mini industry of giving me that information, that's fine. But if you take carbon as a pollutant, which was the argument earlier, and you're charging people for pollutant, which is pure traditional economics, then you don't need it in the ESG statement, because they would be, every time they emit a ton of carbon, they're paying for it. So they're idiots.
Right.
If they can avoid it, that is, and therefore they should be trying to get that down. So you telling me how much carbon they emit means you've got me running their business, when I would have seen it if there's a carbon market in their financials. So this is, I think, some of the paradox, and what we've seen therefore has been interesting. Of course, the decline, I won't attribute all of the decline of listings on the markets to ESG issues, but I think some of it is due to it.
Sarbanes-Oxley, Dodd-Frank, and ESG have decimated the desire of anyone to list publicly in America, certainly. I mean, and all of those are certainly Sarbanes-Oxley was a completely unneeded law that happened after Enron. And the people involved in Enron went to jail under the laws that existed at the time. But this is the sort of political entrepreneurism that happens in the U.S., and that might have been a neologism, but I'm going to go with it, where they see an action they can take, and power is its own accretive attractor, right? I want more power. I'm going to create another law whenever anyone was challenged, Sarbanes and Oxley were challenged on the premises of this stupid new law, which just added hundreds of millions of dollars of costs to no particular benefit. So what's your idea that Andy Fastow, the lying, cheating CFO at Enron, would have done all the illegal things he did, but if the Sarbanes-Oxley had been there and he had to sign it and certify it, we could, I'm caught, take me to jail. I mean, none of it made any sense. And Dodd-Frank has been even worse in that regard. More layers of stupidity that have driven companies out of the public market. And that point on the danger that I find is that even when you set up this separate sort of, if someone wants to pay for an analysis of all these sort of like little factors, one thing that drives me crazy about ESG crowd is they all assume that companies are profitable. None of them have ever run a business, right? Like if profitability were a given, everyone would be an entrepreneur instead of an employee, right? Having managed P&Ls and lived with the stress of payroll and profit and all that, the idea that I could also like care about the red darter snail in a watershed that my company might drive a truck through is laughable. Yeah. Ridiculous. But the danger is not just that, but it's kind of the thin edge of the wedge, because now we get to the absurdity right now where Gary Gensler's SEC, without any constitutional, legal, or statutory authority, wants to impose second-order carbon dioxide emitting requirements on a company. Meaning, your point about if there's a carbon market, it's a financial calculation, right? But not only does he want a Fortune 500 company or any company listed to declare how much carbon they emit, he also wants them to account for all the carbon emissions of every single one of their potential suppliers. It's insanity. I mean, it really is cleaning the Aegean stables with a toothbrush in a hurricane. It makes no sense. But the logic of, or the illogic of, here's the characteristics, extra financial, that we want to examine because we care about something, to a real burden. And that a lot of that lies behind this Attorney General lawsuit against BlackRock right now. Because if you're suddenly having hundreds of millions of dollars of extra cost in examining the investments you're making on behalf of our pensioners, our hardworking cops and teachers and firemen, right? That is eroding their returns. That is harming their retirement. And I don't, it's always a balancing act, right? And this is what we touched on earlier, why some people kind of love to look at a moment in time, a dictatorship, because you take a snapshot, things seem to be working great. Everyone's in line. People aren't throwing gum on the floor, right? But it never works. It never lasts, right? People finally have realized, I just saw a reference today that looking at China's growth, its age cycle, all of a sudden the inevitability that everyone talked about of China surpassing the United States as a #1 economy doesn't look so inevitable anymore. And I'm old enough to remember when they were all telling me that I was going to have to learn to speak Japanese when I got out of high school because the Japanese were going to take over the world. Well, that was the year they bought Rockefeller Center for $1 billion, and that used to mean something. And they sold it back to American investors 2 years later for 120 million. So a lot of that, and that's long-winded. I'm sorry, but like in terms of how do you, in your role in the city, and how do you see the city accounting for those very complex dynamics? Because nothing ever turns out the way we think it's going to be programmatically. You know, how do people adjust for that, or are they just, it's transactional? I do a deal one moment in time, we see how it works, and we'll go from there.
Yeah, well, I think there's an interesting problem here. We talk over here about the blob, which is the inexorable rise of a state that you can't seem to fight. It's a like enormous bunch of pounded yam, and every time you try and poke at it, it goes and it sucks it all up again. You know. But I think we do have a related problem in kind of the Slav state laws, you know, obscuring business, because there are very few people out there who celebrate all the good things that business has done. And you know, I'm just looking behind you. Everything there has been produced by a business, not by a bureaucrat. You know, it's we've got our phones. We're talking transatlantically, etc. You can take one extreme over here. There's Mariana Mazzucata, who talks about the entrepreneurial state and sort of believes that you wouldn't have anything without the state. Obama made a speech which you could extrapolate, said that you owe your life to the state.
You didn't build that. Oh my God! Every person that ever worked for a for-profit business in America is like, can I throw a snowball at you?
Yeah. And then there's the other extreme, which says I have nothing to do with the state, which is equally wrong. So you know, it's somewhere in the middle. But the point I'm trying to make is that there are classes of decisions better made in one than in the other. So if you believe that climate change just needs one big decision, Congress passes a bill and presto, it's done, or whatever, you don't live in my world. my world is one of trillions of little decisions. Do I buy this product or that? Do I set up this biomass plant or not? Do I wait a year until the technology is proven before I do it? And these are all decisions that need to be made. And markets allow us to make those decisions. There's the famous story of the Russians coming to London in the 50s and seeing how bread was produced, and then wondering where the central bread bakery control was.
Right.
You know, and realizing, wait, that's how the markets work. And we've gotten it, I think, into a society where those two areas are blending too much together. Slav is now it's coming into running the businesses. What it should be doing is setting up frameworks that allow the businesses to make those decisions against some bigger decisions that have been made by the state. So carbon is a particularly good example here. If you really set up a functioning carbon market, you can take all that stuff out of the ESG, and I don't need to go from scope 1 to scope 2 to, God forbid, scope 3, which is where they're headed, which is where you're responsible for your consumers and not just your suppliers, which leads to tremendous amounts of triple counting, which is silly. But I don't need that. This is me trying to run a carbon accounting system alongside your system, and I don't handle that. If you produce you know, something made of steel, I don't tell you to use less steel. You use less steel because it costs you. And if you can't sell your product because, well, Michael, you know, I'm really sorry you decided to buy my competitor's product. Well, Christopher, it was half the price of yours. Well, that's because he uses half as much steel. Well, you know, Christopher, use half as much steel. I mean, we get that one. That's how markets work. So why are we starting to put too much legality into it? And legality has very little room for finessing decisions. It's to lawyers, everything is right or wrong. I exaggerate a bit, but broadly, you know, they want to boil it down to right or wrong. And there are many things that aren't right or wrong. I don't think this is the right time to invest in renewables, perhaps, right? And I'm not going to invest in it, and it's going to cost me because I'm going to be emitting carbon as the price is rising. But I think I'll save more money by waiting. You know, fine, that's my decision. It's a rich decision. So it's an intriguing problem that we face, I think, societally, of returning back to a celebration of where the rules are apply that are market-based and where the rules apply that are legal. Once you've established the legality of something and you're running within a legal framework, you should arguably be allowed basically to do that. If people want to know how you're doing it, that's fine. I've got no qualms with them writing their own ESG standards, but I think that broadly, you know, I would probably ignore most of them because I'd be trying to run my company well in the first place.
Correct. And here though, here's the difficulty, which I think is a perfect kind of closing point, because I know you got to run. That what you just expressed is the perfectly rational definition of what used to be, at least in America, up until probably 20 years ago, the push and pull, arguably between the left and the right, broadly speaking, right? From post-war America until probably 20 years ago, the argument was between workers and capital, right? Everyone agreed the system was the thing that worked. Everyone agreed that entrepreneurial industrial capitalism was what created prosperity, right? You go to work either you're an investor in Ford, you're a worker at Ford, and there's an argument back and forth as to how much should the worker get out of the product. All that was classic back and forth, push and pull, unionization, non-unionization. And your discussion just there posits that exact same framework. We are going to, tussle within a bounded set about how to allocate rights and responsibilities, profits. But the problem with, at least in America, today's modern left is they don't believe in capitalism. They've been deluded by 20 years of neo-Marxian nonsense in our universities. More kids coming out of school think that socialism just sounds peachy. So that becomes an existential threat, because you've got one political party or portion or political movement within a party that wants to abolish the rights of the shareholders, right? So that to me is the bigger danger. It's not, are we going to argue about how much carbon did your OEM provider make with this thing in the car part? It's that you've got one political movement that if they win, they will destroy the system.
Yeah,
that's a big argument of how do we get there so that we even include everyone in believing that what you're describing makes sense, that we should have a contractual rights and responsibilities.
Well, if I can squeeze one last point in, it's about a manager's responsibility, because it's not. This isn't a whinge that says, "Oh gosh, the world in the last 20 years has just gone bad." Mistakes have been made.
Sure.
The family and I, we watched Dark Waters, which is about the DuPont scandal in West Virginia. We've all seen Aaron Brockovich. So corporates do get up to no good. Okay, and I think the biggest thing is what they haven't done. So instead of celebrating what businesses can do, they've kind of let that be assumed. So they haven't done that. But the second thing is we haven't cleaned up our act, and we've fallen into the idea that the state regulates and then we just do what we feel like. There's a lovely paper written about 10 years ago by Karthik Ramana and forgotten her name, Rachel Henderson, I believe. It's called Managers. It's an HBR paper, and it talks about a manager's moral duty to capitalism. And what's interesting is my paraphrase of the paper, go read it if you want to see their words, but what I took away from it was society has many different ways of solving problems. We've spoken about, we can create a market for it, which people in business ought to love. COP3 should have been the best dream realized ever amongst people. We've got a big global problem and we're going to solve it using markets. Yes.
Now we're going to have to agree to that market.
We can send in the army, we can do command and control, we can run state enterprises. We got a whole range of solving problems, pass laws, whatever we feel like. And when society says to businesses and markets, here you go, you take care of that one, delivering the bread, getting the clothes made, doing the iPhones, you guys sort that stuff out. We have a responsibility to make sure we do it well. And we need to call out other people, which is why competition is important. When you get a few core players, they don't compete and they collude. Over here, we had one of the biggest scandals of all time was the payment protection indemnity insurance, payment protection insurance, which was the banks forced mortgage holders to take out. The scale of it in our economy exceeded 46 billion.
That's crazy.
It's just impossible to believe. That's something like 1,300 or 1,400 dollars a British family. I mean, it's an outstanding scandal. But 4 banks were colluding on it, and they had a regulator, but the regulator didn't understand the market. In the olden days, so to speak, the days I'd like to see, there was a market that would haul its fellow players in and say, we think you're getting up to no good. We make sausages, and we're pretty clear that your sausages ain't exactly wholesome. And we'd like
too much sawdust.
We'd like you to clean it up. Well, actually, was a case over here where it wasn't until we came into the EU, which sort of undermines my own argument a little bit, but truthfully, a British sausage consisted of 2% meat.
I don't even want.
And when it came into the EU, they came up with a test for protein, and it shot up to 51% protein, which was the requirement or something like that. But then they came up with a way to test the difference between soy protein and animal protein
And
and
then
scale.
go back and do it all over again.
Yeah.
Oh, that's
So no, but
terrible.
we need to keep markets clean. So
Yeah.
yes, we need to celebrate them. Yes, we can whinge a little bit that too much goes one side when it could come here or whatever, and that the two sides are getting a little bit muddled up, which isn't helping either. But the biggest thing we need to do is to find ways to keep ourselves clean by being honest about where the failings are and cleaning them up quickly. And I think, it's a good world out there and we can make it better. And I hope that's kind of what we've been trying to do here in the city. And we're not perfect either.
No, and it's an excellent point. I mean, that's what I found so absolutely hilarious about carbon, whether it's heating the planet or whatever. Some people argue around the ESG civic carbon markets, like, well, Luxembourg doesn't have any volcanoes, Iceland does, right? So is Iceland held to a different standard because their planet can burp forth more carbon dioxide in an afternoon than the entire economy will in 2 decades, right? How do you balance that out? Because you can't get the Earth to agree to carbon trading. Right? But the argument that we've got, because what I find so absolutely hilarious is that I give enormous credit to those people who, and I don't think that anyone's ill-intentioned, right? In terms of when they talk about mining, what I love is I've been involved in mining for 20 years now, right? I will happily eat lunch on the floor of a coal mine in Kentucky. Mining now, there's no resemblance, but the pictures they always use, they grab the same stock photo from 1850 of the 7-year-old and the 4-year-old with their lunch bucket covered in coal dust, and they talk about mining. And the major problem that we've always said in the mining community is, like, we have the worst PR in the universe, right? The two of the mines I'm involved with directly right now, they are by nature net zero. They're hydropowered, right? We don't want to be belching diesel fuels down shaft any more than you do, right? So we're already operating, but we did that not because, and of course, are we going to take our hats off and talk about it, in terms of net zero and lower carbon emissions? Of course we will, because it's popular. But we were doing it anyway because it made economic sense to do it, even before there's a charge for carbon, right? So for the mining industry, certainly we need to do a better job. I had a great chat at a New York meetup, tech meetup, which was one of the first ones, and it was very quickly. It was the setting was perfect because it was a monthly thing, and this one happened to be a design competition about teams could envision what urban life would look like in an era of autonomous cars, right? So if you don't have people driving, how does that change the cityscape? Very interesting. And one of the teams was from an upstate New York university, I will not name, because at the part of the structure of this thing is at every intermission, you have to introduce yourself to 2 people you don't know. So it's a networking thing. Turn to the woman next to me who's been cheering this team. And I said, what do you do? She says, oh, I'm an industrial design professor. Okay, she's not a professor of comparative French literature, industrial design. What do you do? I said, I'm a mining investor. She said, how do you live with that morally? I looked at it, I said, what? The hundreds of thousands of jobs we create, the billions of dollars in taxes we produce, or the fact that everything here, including the phone you're holding, comes from a mine? I sleep like a baby. What are you talking about? And what was fascinating was no one had ever said that to her. And she's in industrial design. This stuff comes from somewhere, baby. Right? Like, it was just, and to her credit, she kind of laughed at herself. But like the fact that here is someone in a renowned university had never heard anyone say, what do you mean how I sleep? Did she expect me to go on the defensive? What are you talking about? We create everything that makes this building possible. I feel great. So I don't know how we bridge that chasm. I don't know if that's a topic for another day, but your final thought on
Oh, I don't know. It's I'm just riffing off you. We when I opened, I said we describe ourselves as a commercial think tank, right? Well, I go to many conferences too with people like this woman you were describing, and they get on stage and they go, I work for a not-for-profit, I work for an NGO, I work for a third sector organization.
right.
And I get up there and I go, I make a profit. I know I add value.
Exactly. That's how I can tell. Exactly.
Now, I wish I made more profit, and that's not a lot of truth in it, in some sense. But I think we need to have more of that open discourse, and I think it's great that she responded so positively to you, and that you were so straight with her. And we're going to get there. And so I guess I often end a lot of discussions on, let's be optimistic. Pessimism is for better times.
Excellent. That is absolutely excellent. And I'm going to leave that copyright with you and end the way we normally do, which is thank you so much for Michael coming on. To my listeners, save yourself the brain pain, turn off the mainstream media because they're lying to you, and tune into Messy Times. Thanks so much.